Assalamualaikum and a very good morning to our beloved lecturer, Madam Siti Nur Fatimah binti MINHAD. My name is Nurul Amani and I will present the answer for FAR620 Group Project 1, question 1A to 1D. The question is as per shown on the next slide. First of all, question 1A to 1B asks us to compute the goodwill or bargain purchase. So, how to calculate goodwill? Okay, the format is as shown on the screen. It's begin with consideration transferred less by debentures, add with non-controlling interest or NCI, and less by all fair value net assets and impairments if they are provided. So, for 1A, the goodwill on acquisition of Mas Berhad, we have consideration transferred amounted Rm 490 million less by 2/3 debentures of 100 million, we got Rm 390 million. Then, by adding Rm 68.8 million of 20% of NCI, we got 458.8 million. And then we minus all the fair value net asset here, Rm 344 million, consists of share capital, retained earning, and then ARR. Okay, lastly, we minus the impairments from the additional information. So, we got the goodwill amounting Rm 108.8 million. Okay, so for 1B, to compute the goodwill on acquisition of Tanjung Berhad, we have Rm 118.4 million in direct considered transfer and 103.74 NCI minus by all fair value net asset of Rm 119.5 million. Then, we got Rm 22.64 million of goodwill. Okay, why is the amount recognized as a goodwill? It's because the fair value net asset of investee is less than the fair value of investee's equity shares as held by all the equity holders. It is vice versa for bargain purchase. So, in this case, there is no bargain purchase for both questions, as fair value net asset of Akok Berhad is less than fair value of its equity shares. Next, we move to 1C, which is the question require us to calculate gain or loss on the second acquisition of Mas Berhad. Okay, how to calculate gain or loss on acquisition? It is an easy step where we have to minus considered transfer with all fair value net asset and then the interest of acquisition based on fair value net asset. So, the fair value net asset that we have here is share capital and then the sum of return profit amounting Rm 132 million, and then reversion reserve, we minus with the interest on second acquisition, we got the gain on second acquisition amounting Rm 33.2 million. Okay, and then we have to make sure that we do not make a careless mistake by writing gain or loss on the final amount below, because we already got the positive amount which is indicate to gain, and if we got the negative amount, it will be the loss, and we should write the loss for the second acquisition. Okay, next, the consolidated statement of profit or loss for the year ended 31 December 2020 for Akok Berhad. Okay, so what is the format for consolidated SOPL? Okay, as usual, to get gross profit, we minus revenue with cost of sale and then minus all the expenses and add all the income, we will get the profit before tax. So, just charge the taxation for the year, we will get profit after tax. Okay, after that, we include the other comprehensive income, profit attributable to, and then the other comprehensive income attributable to. Okay, so to answer this question, we got Rm 337 million for gross profit after considering the working calculation in the additional information and question. After working on minus and adding all expenses and income that we refer to the additional info and statement provided, we got the profit before tax of Rm 160 million. Then it will be charged to taxation Rm 30 million as on the SOPL in the question. So we got Rm 130 for the profit after tax. Next, we have to include revaluation surplus for other comprehensive income from additional information and gain on second acquisition as per shown on 1C just now. Okay, then we will get 185.2 million of total comprehensive income. As for consolidated SOPL, we have to include profit attributable to parent company amounting Rm 121.34 million and NCI of 8.66 million for Mas Berhad and Tanjung Berhad. Okay, how to calculate NCI? Okay, by adding profit for the year, URP inventory, preferred dividend paid and interest on debentures, we will get the NCI. Okay, we can get this figure from the question usually. So for further understanding, we can refer the working one on the right side. Not to be forgotten are the comprehensive income attributable to Akok Berhad, NCI for Mas Berhad and Tanjung Berhad as per shown in working one. Okay, lastly, we have to make sure the amount we got is tally with the profit after tax and total comprehensive income to make sure all the calculation we made is correct. Next, we move to 1E, consolidated statement of changes in equity of Akok Berhad. Okay, so what is the format of consolidated SOCHE? Okay, first is the column of particular, followed by the GRP, NCI and GRR column. Okay, as the balance brought down, we got from the schedule of Rm 265.6 million and Rm 178.6 million and Rm 72 million for each of the GRP, NCI and GRR. Add with the profit for the year, the acquisition and changes in shareholding, also add with the surplus of revaluation. Then we total with impairment from additional information and ordinary dividend paid of GRP and NCI, where we got it from additional information 4 and working 3. Okay, so as at 31 December 2020, we got GRP amounting Rm 376.14, an NCI of Rm 235 million and GRR cost Rm 93.8 million. So what is the uses of these amounts? Okay, we have to transfer these amounts to the consolidated statement of financial position under equity. Okay, that's all from me. Adelina will take over the presentation of 1D. Thank you.
Hi, Assalamualaikum. My name is Adelina binti HAMUNIR and I'll be presenting for question 1F, which is Consolidated Statement of Financial Position as at 31st December 2020 of Akok Berhad, and we have question 2, which comprise of MFRS 10, MFRS 11 and MFRS 128. So, for the first, 1F is Akok Berhad Consolidated Statement of Financial Position as at 31st December 2020. In this statement, we have non-current asset, we have current asset, we have equity, we have non-current liabilities, and also we have current liabilities. Move to the non-current asset, it comprises of property, plant and equipment, intangible asset, investment in bunga, and also goodwill. The total amount of the non-current asset is 1460.94 million, where we obtain from the SOFP from the question and also the adjustment that we collect from the additional information. For the PPE, we get 1289.90 million after the additional information and workings. And for the intangible asset, we got 18 million. Investment in bunga, we got 131.44 million. And goodwill, we got 21.6 million. Moving to the next is the current asset, where we have inventory, trade receivable, bill receivable, and bank. The amount here is also obtained from the soft P and also adjustment and the additional information, such as for the inventory. -1 is from the additional information number 2. The total amount for the current asset is 565 million. So the total asset, after sum up the non-current asset and current asset, is 2025.94 million. Okay, next we move to the equity. Share capital of the holding is 720 million. Group retained profit is 376.14 million. And non-controlling interest is 235 million. And group revaluation reserve is 93.8 million. The total amount of the equity is 1424.94 million. The equity is obtained from the SOCHE, or known as Consolidated Statement of Changes in Equity. Next, we move to the non-current liabilities. Non-current liabilities, we have 6% debentures and also bank loan. Debentures is 1/3 times 150 is because in the additional information, we have Mas Berhad has recorded and paid interest on the 6% debentures for the first 8 months of the year, and Akok Berhad has recorded its portion too. However, both companies did not adjust the balance of the 4 interest due. Therefore, that is why we count it as 1/3 times 150 million. And the bank loan, we have 278 million. Next, moving to the current liabilities, we have trade payable, bill payables, accrual, ordinary dividend payables, and interest on debentures. The amount here is also obtained from the statement of financial position, from the question, and also the working. So we have the total amount of 273 million of the current liabilities. After sum up the equity, non-current liabilities, and current liabilities, we will have 2025.94 million, which is tally with the total asset. Question 2 we have here is, for the question 2A, is state your opinion on Damia's and Delisha view. Joint arrangement and FAR620 is investment in associate and joint ventures. For the question 2B, we have Oak Berhad acquired 40% of the 100 million ordinary share issued by Beach Berhad recently. Beach Berhad redeemed 30 million of the shares from the market other than Oak. Discuss the relationship of Oak Berhad and Beach Berhad before and after the shares buyback. So next we will move to the question 2A, which is RS10, which is consolidated financial statement. In this MFR, its consolidated financial statement is an established principle for presenting and preparing consolidated financial statement when entity controls one or more entities. Also, in IFRS 10, it is the requirement that an investor have all 3 of the following to have control over investee first. And then the second is control over the investee is the exposure to or rights variable returns because of its engagement with the investee. And the third one is the ability to use its control over the investee to influence the amount of the investor return. By following the MFRS and answering to this question, Mega Berhad owns power over its investee. Mega Berhad controls the majority of Delhi Berhad's voting right. Mega Berhad, on the other hand, can wield power even if it does not control much of an investee voting right. Next is MFRS 11, where in MFRS 11, it is the Malaysian Financial Standard Reporting 11 is an arrangement of which 2 or more parties have joint control. A joint arrangement is either joint operation or joint venture. A joint operation is joint arrangement in which the parties have joint control of the arrangement and have rights to the asset and obligation for the liabilities. So, based on the standard, there are two types of joints. The contractual terms are important in determining whether it is a joint operation or a joint venture. By looking at the question, there is an existence of joint control that is agreed between entities in sharing control of an agreement when the relevant activities need the concordant consent of parties in sharing control. Observing the question, Mega Berhad, the investor, possesses the highest interest of 40% in Delhi Berhad than Turkiya and B Berhad. For every operating and financing decision, they need to gain approval among the directors. Next, in accordance with the Malaysian Accounting Standard 128, investment in associate and joint ventures set the accounting objective in associate and joint venture that account for investment in associate and sets the requirement for the use of the equity method in accounting for investment in associate companies and joint ventures. As for IAS 128, the scope also applies to all companies that are investors with joint control or significant influence over an investee. Shareholders in associate company and joint venture have the same significance as an associate company in which investor has significant stake. So, based on the question, Damia and Delisha view, Delhi Berhad is a joint control. To prove this, in line 3, there was a contractual agreement between Mega Berhad, Turkiya and B Berhad, which enabled Delhi Berhad in their joint control. This is suitable with the FAR620, which is investment in associate and joint ventures, and relies on an equity method where joint venture is recognized at cost, and its carrying amount might be increased or decreased with investor shares of the post-acquisition to profit or loss of investee. The investor share of the acquisition of other comprehensive income of the investee and dividends and other distribution from the investee less than the carrying amount of the investee. We cannot say that Mega is having significant influence through conserving 40% interest in Delhi Berhad because beside the point, SPAT require the unanimous consent of all the business sharing control. Okay, now we move to the question 2B. In this question, it wants us to observe the relationship of Oak Berhad and Beach Berhad before and after the share buyback. As Oak Berhad acquired 40% of the 100 million ordinary shares issued by Beach Berhad, and Beach redeemed the share buyback for 30 million of the shares from other than Oak Berhad. Associate with an accountant for using the equity method of accounting, seeing as 40% is insufficient to control Beach but only has a significant influence. Beach Berhad is the subsidiary to the Oak Berhad. By buying back 30% of the total outstanding shares would make the parent Oak Berhad have 57% of the total voting rights of Beach. Therefore, Oak Berhad can exert control of Beach Berhad operation. Control means you have right over investee, exposure or rights to variable return from its involvement with the investee, and the ability to use its power over investor to affect amount of the investor's returns.
Hi, Assalamualaikum. My name is SUHANA binti IDAHAM. I'm the last presenter for question 3 and 4. So, we move on to the question 3. Delhi Berhad is a public listed company and listed on Bursa Malaysia since 2014. In January 2015, Delhi Berhad has acquired 80% interest in Cucu Berhad for 30 million. A fair valuation exercise conducted on the date acquisition revealed that Cucu Berhad fair value of the net asset was equal to its carrying amount. Under that acquisition, the fair value of the net asset of Cucu Berhad was 35 million. On January 21, Delhi Berhad disposed 50 of its interest in Cucu to ADLINA for 50 million when the fair value of the net asset of Cucu was 70 million. On the date of disposal, The fair value of remaining share was 20 million. The financial end date of HIHI Group is on 31st December every year. The goodwill of acquisition remains unimpaired since the date of acquisition. It is the group policy to value the non-controlling interest as the appropriate share of the fair value of the subsidiary inflatable net asset at the acquisition date. The first question is calculate the gain or loss on disposal for share for HIHI Group. B. Discuss the relationship between HIHI and Cucu after the disposal. So, to calculate the gain or loss on disposal of share for HIHI Group, first we put consolidation transferred 30 million plus non-controlling interest. We get non-controlling interest by 25 million multiplied by 20%, we got 5 million. Then we minus fair value net of subsidiary 25 million. Then we got goodwill for 10 million. Next, proceed received 50 million plus fair value of remaining interest 20 million and total 70 million. So we minus fair value on the date of disposal 70 million multiplied by 80%, we got 56 million, and minus goodwill from the previous working 10 million, and we got gain or loss on disposal by 4 million. B. Discuss the relationship between HIHI and Cucu Berhad after the disposal. The holding entity disposed of part of the interest increase yet hold a substantial interest in the investee, sufficient to exert influence over the investee. The investee became an associate. As on this case, he initially held an 80% of Cucu and then disposed 50% of their share, thereby resulting in the HIHI only a 30% in Cucu Berhad, then become an associate. Since he disposed 50% of the interest, he will lose control in Cucu. Therefore, goodwill will not be retained and will be disposed of partly or all. The goodwill will be written off against the gain or loss on disposal. This is because when the investor, which is he loses control, but retains some of the interest, he is deemed to have disposed all of the interest in the investee and repurchase the retaining interest. In conclusion, he will lose control in Cucu but have significant influence. Meanwhile, Cucu will become an associate. Next, we move on to question 4. On January 2021, Apple Berhad held 40% of the voting right in Grape Berhad, while Coconut Berhad and Strawberry Berhad equally held the remaining. Grape Berhad was involved in selling and marketing of fruits for many years. In recent shareholder meeting, it was agreed that Coconut Berhad would have the power to direct all relevant activities related to marketing issues due to their expertise in their field. Apple Berhad believed that it is controlled Grape Berhad due to its majority voting right as compared to the other stakeholders in Grape Berhad. However, Coconut Berhad argued that it is also a power over Grape Berhad even though it holds lesser voting right. So the question is discuss whether any company has power over Grape Berhad according to MFRS 10. So, Apple Berhad do not have power over Grape Berhad. This is because, based on MFRS 10, power arises from existence of right. Power could result from voting right and right embedded in contractual agreement. MFRS 10 states that when an investor holds more than half of the voting right of an investee, the investor has power in the following situation. The relevant activities are directed by a vote of the holder of the majority of voting right, or a majority of the member of the governing body by direct the relevant activities are appointed by a vote of the holder of majority of the voting right. So, in this case, Apple Berhad has power in Grape Berhad because Apple Berhad holds the majority voting right, which is give the investor the ability to direct relevant activities. Furthermore, Coconut Berhad also has power in Grape Berhad. Based on MFRS 10, there is also a situation where control is present even though the parents own less than 1/2 of the voting power to the other entity, such as when the parent has power over more than one of half of voting right by virtue of an agreement with other investor. B. Power to govern the financial and operating policy of the company by statute or an agreement. C. Power to appoint or remove the majority of the members of board director or equivalent governing body. D. Power to cast the majority of votes at meeting of the board of director or equivalent governing body. Therefore, Coconut Berhad has the power because in the recent shareholder meeting, it was agreed that Coconut Berhad will have the power to direct all relevant activities related to marketing issue due to expertise in the field. See, it was agreed during shareholder meeting and approved. Thus, Coconut Berhad also has power over Great Berhad. In conclusion, Apple Berhad and Coconut Berhad both have the power over Great Berhad. Thank you for listening.